Why do you think that a stockbroker knows more than you do?
Investing. The crowd is wrong. An informational seminar presented by the Airline Pilot Investment Group.
Hello, my name is Gene Steele, and thank you for coming to my seminar, The Crowd is Wrong. Today we're going to teach you how to be technical investors, and you can disregard from now on your stockbroker, your newsletters, and all of those things by using technical analysis. Let's take a look at our objectives for the time we spend together. What we're going to do for the next hour or so is teach you to keep your stocks under your own supervision. You won't need to have somebody call you. You won't need to check the every day. But with this method, which is actually 100 years old, you'll be able to profit with your investments and be able to monitor your own investments. I'm going to teach you how to spot what we call buy formations by looking at charts, signals that tell you when to buy a stock, just by looking at the chart. We're going to teach you how to watch for sell signals, telling you when to sell, and formation of price objectives. The price objective will tell you how high the stock is going to go and when you should get out. So you will know what you've always wanted to know: when to buy, how high the stock is going, and when to sell. We're also going to show you how to monitor the overall market. You may have heard the phrase, "a rising tide lifts all boats." And what that means is, when the market is up, we've had this bull market for some time, that the stocks are carried along with it. Some bad stocks are those stocks that do not rise with a rising market. And you can also tell if they're good stocks by how they react in a falling market. So you would not invest on the long side if the market were going down. You would not buy a stock if it were in a downtrend. What we'll learn is you need to first market. Are we in a rising market? Then the sector. A sector is, for example, medical technologies or computers or airlines. Are those going up? And what is the individual stock doing? Now, this has always fascinated me as to why people would trust other people with their money. And I think this sort of sums it up. This cartoon says, actually, I'd be more inclined to take your financial advice if I could stop wondering why you're still working for a living. Why do you think that a stockbroker knows more than you do? Let me just tell you something about stockbrokers. I don't know how you think stockbrokers become stockbrokers, but any of you could become a stockbroker by taking a simple test. And to review for that test takes about a week if you took a class, and now you're a stockbroker. Did you ever ask your stockbroker how they became a stockbroker? I hear on the radio, registered investment advisor. Now that sounds very impressive on these radio shows. People call in for advice. Joe, I got to General Electric. What did you buy it at? Are you going to hold it? Or, oh, that's a good stock. How does he know that? He doesn't know that. And people listen, oh, you're great, Joe. Registered investment advisor. How do you do that? How do you become a registered investment advisor? You take a 2-hour test. What are the educational requirements to be a registered investment advisor? There are none. You don't have to be a high school graduate to be a registered investment advisor. Well, do you have to have any kind of money? No. You don't have to have a dime. And any of you could become a registered investment advisor. Just take a 2-hour, buy a home study course. Certified financial planner, a home study course. Back in 1200 BC, the first financial planners were telling you what to do with your portfolio. This is from the Talmud. It said, let every man divide his money into 3 parts and invest a third in land, a third in business, and a third let him keep in reserve. Well, we haven't come from that in terms of our overall portfolio. The traditional method was 10% in cash, 40% in bonds, 50% in stock. That's the old method. But over time, naturally, Some professors got involved. And when they got involved and did some studies, we developed what's called modern portfolio theory. Now, portfolio theory is a result of a few guys who got a Nobel Prize for their work. And what they determined was a buy and hold philosophy or practice was better than trading. I personally don't believe in that, and there's a reason for that. But what they don't tell you about modern portfolio theory is it assumes that you want to maintain the same amount of risk. Your willingness to accept a loss. And we'll talk about risk in more detail. Modern portfolio theory has studied each of the various assets and grouped them into asset classes. Now, the asset classes have a certain return. And by balancing various assets, you get an even return with either less risk or a better return with the same amount of risk that you're willing to accept. Modern portfolio theory now coming under some question. Why do we invest? What's our biggest enemy? Our biggest enemy is inflation. Most people are not really conscious of it, but as you get on in years, you remember when that Lincoln Continental was $2,000. Now people are paying enough for a car to buy a house, what they could buy a house for before. So let's take an example, the impact of inflation. Here we have a widow, age 50. She's got a 30-year life expectancy. She's invested in 5% CDs, or $1 million. 4% inflation rate, and of the $1 million, now, every year at 5%, she'll get $50,000. 10 years from now, her $1 million is worth about $675,000. Now she gets $33,000 of income to spend. 20 years, now she's got about $500,000 left with an income of $22,000. And in her 30th year, she's lost 2/3 of her money, her principal, and has only $15,000 in income. Inflation. This is why we invest, because if we don't invest, our money will be eaten away, and as you reach your older years and the prices keep going up and we have a steady inflation, you're going to have less and less. So $1 million sounds like a lot of money, but they're talking now that if you're a young person, if you don't have $1 million when you retire, you're not going to be able to live. Okay, this is your first glimpse of a point and figure chart. Point and figure charts have been around for about 100 years. It was the first method of tracking the stock market before bar charts. Now, what this tells you is a few things. First of all, on the left is the price. Point and figure charts do not track time the way bar charts do. What do point and figure charts talk about? What determines the price of a stock? What determines the price of a stock? What do you think determines the price? Anybody have another opinion?
Volume.
Volume, price of the stock? Price of a stock is determined by one thing and one thing only: supply and demand. That's all. Whether it's stock or whether it's a pencil or whatever it is, supply and demand.